So for today, the order is an iceberg order. Now, for those of you who don't know what an iceberg order is, since the advent of automated programs within the future space, and where you get your big block buyers or your big block sellers. So say someone, say this is one individual at 44s over here, 292 lots, okay. And he actually wants to distribute, there's actually 1,000 lots sitting there, but he's only showing 292 lots at that very moment. Now, every single time that order gets taken, what then happens is that he reloads it until he fills potentially 4,000 lots. So his actual sell side order at 44s is 4,000 lots, and he's distributing them in clips of 300 lots. Okay. Now I know the guys in the career program, probably you guys did your iceberg patterns and all that last week. Now that could be at one price, or it could be distributed over prices. It could be 292 lots, and he will distribute it over a price of 44 to 47. You get different types of icebergs. You get volume slice orders, you get time sliced orders, time slices over a period of time, and sometimes you can only pick that up on the delta throughout the day. Someone's just distributing a sell side activity every time, every 10 minutes or every 15 minutes, with another requirement of, for every 15 minutes that there's at least 10,000 lots that has gone into the market, I will sell 600 lots. And this is so your big institutional players, your pension funds, your hedge funds, can get their orders away without disturbing the market. Now, what we're going to be looking at today is the 37s. Okay, so I want you to concentrate, and then after this video, when we load it up on the website, you can watch a little bit a little bit more closer. I'm going to give you, a few little pointers, and then you're going to, watch it again in your own time as you try and build your ability to spot various types of iceberg patterns. During the whole day, the market is filled with iceberg patterns and automated programs along, but it's when it's the observable ones, it's the ones that you can observe very clearly is the most important that you can build a trading strategy around. And what we're looking at over here is the 37s. Now, what I want you first to notice is at this moment, 533 lots have been traded at that price. Okay, so you've got that now into your conscious observation. What's also important and what's really great with the Jigsaw tool is actually there's a volume profile. And the volume value area at the moment is located between 35s and 27s, and these are the outliers, beyond the 70% mean. Now, let's just, that doesn't work. Oh, there we go. Okay, so 37s, 162, 37. This happened yesterday. This is before the cash, just going on to the cash session, and let's now play. Okay. So I'm going to be playing this at around 2 times the speed until 8:14. So you're watching. Okay. So this is now playing at 2 times the speed at the moment. So it's going to be some talking commentary at the moment. So what you're noticing, firstly, you're seeing prices being traded out, okay, normal trading activity, markets trading 33s, traded out, it's come towards 34s, trade out, someone's traded back, so it's actually auctioning, so it's auctioning on both sides, you're not seeing anything specific or particular, now it's trading towards the 35. It's gone off and over, but nothing that's brought our eyes to a specific type of order flow pattern attention. Now the market is sticking around the 35s. Okay, the 36s, every time, so you'll notice there it had about 50 lots and it reloaded about 280 lots. So we're watching the 35s here again, 35s, 36s, nothing observation. I do recall, whilst you're watching it, so 200 lots went up there at the 37s, immediately offered down 2 ticks. So it literally flashed 200 lots. So 200 lots went through the 37s. So now I'll start watching this. Now I only observed this probably 3 minutes, around 10 past 8. The time now is 8 minutes past 8. So we're watching here the 37s, okay? So nothing's really been traded at the 37s yet. You're watching the 233 lots that's sitting on the offer over here. So we continue to watch this over here. Okay, so it flashed, so 500 lots went through there. So it went, or about 400 lots went through there. They pulled the offer, immediately they reloaded and they offered it down to 36s. So you can see immediately, every time it goes to the 37s, the moment the buyer takes the sell side offer, they offer it immediately, quickly, like 1 to 2 ticks. So it's a lot. So we're watching here again. 300 lots have just gone through. He's reloaded. So that's another 400 lots that's just gone through at the 37s. So you're seeing a clear line in the sand here, and someone's keeps on reloading. So we're watching the 37s again, all right? Now, once you start observing this, and if you've watched the market, you could potentially start saying, well, I've observed this iceberg pattern. Every time it comes here, he actually flashes it fairly hard. So you can potentially get a short way over here. I don't know if I can click over there. Probably not. Or you can get a short trade over here at 36s whilst you're watching. So already we've had 1,500 lots traded at 37s. But what's really clearly observable is every time the offer gets reduced over here, or someone takes it, he reloads it immediately with size and with conviction. It's not like 50 lots and he starts disappearing, and it's the pace of the reload is very aggressive. So the pace of a reload is very important for a strong iceberging pattern. So whilst we're watching here at the 37, the last time we saw was like 2,000 lots. It's another 500 lots, and he keeps on leaving 300 lots. Every time those 200 to 300 lots gets taken, he reloads it again. So the iceberg, if it's an automated pattern, keeps on reloading it. So you could have a short over here at 36s, because everyone who's been buying the 37s to 36s, eventually, once the buyer starts slowing down, you start seeing him hitting the bid less and less aggressively, there's going to be that trigger point where when the market trades a certain few prices down, that it has to flush those buy side orders that were going in on the market. So we're watching here. Now there's 115 lots. Now watch here there. Did you see that? So the 115 lots got taken. Immediately he put 200 lots on top of it. So really, really quiet. And when your eyes start saying, you're saying, well, he keeps on doing the same thing. So you can start getting your short over here, and your risk effectively is 38s, 39s. If this is a powerful iceberg pattern and it's consistently running 300 lots, your risk is literally 1 to 2 ticks. And you're looking for the market to unravel. We've had about 3,000 lots. So how many lots would it take for the market, if 3,000 lots, came down to the bottom? So now remember this. We had 500 lots sitting here right at the beginning of the video. We've now had an extra 3,000 lots go through the market over here. And you can see this little low volume node. The iceberg is not letting the market trade 38s, 39s, or 40s at this specific moment in time. I was actually sat 36 short here, but I was a little bit uncomfortable from a correlation perspective in the trade, because the Euro stocks was actually starting to offer it down. But you're supporting your trade purely from an order flow perspective, and how you're supporting it is that there is an iceberg over there and you're scalping with the iceberg. So we've seen now almost 3,500 lots. Now watch this again. Watch the 37s. Okay, so you're watching it closely here. Let's see if any buyers are wanting to take this iceberg on again. So there 500 lots went through, loaded up 200 lots again. Did you see that? So 500 lots went through there again, and he kept on reloading. Another 100 lots has gone through there. So he's pulling, so there again. Now a big 700 lot has come on top, just below the 36. This is now there when it started pushing the market lower. So all of a sudden you could have extra conviction. So all of a sudden you can potentially, now this isn't a classic front run, because the front run is a large order that's been existing there for a while. But what you've got here, you've got an iceberg order, a large order that comes just in front of that iceberg order, and then there's time to potentially go in for an aggressive short side squeeze. Okay, so now you're watching this activity, and slowly the market starts rotating now. So what time is it now? It's 8:17. Now I'm going to play this. So you've seen how, now what's happened, you can see clearly over here, almost 12,000 contracts that have gone through over here. Now what I'm keeping an eye on, and I say, okay, this is what this iceberg has done. Now, I expect the market to start gravitating further south, as the buyers start retreating. What actually happened, the correlations of the market, the equity market started getting a little bit hit yesterday, if you guys can remember. So what I've now put on, the line in the sand is, okay, so we have this 37s over here as a key area. I've identified an iceberg pattern. One strategy is to join the iceberg. Okay, as you're scalping, as once you observe that very noticeable iceberg type of order flow pattern, is join the iceberg and scalping with size. One of our best flipper traders based out in Germany, when he sees when he knows he's got a 90% chance or 95% chance of making 1 or 2 ticks, he trades 100, 200 lots. That's the power of leverage, in the futures market when you observe a pattern that you have a 90% opportunity of getting the next tick or 2 ticks.